What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday, the 13th. We have the equity markets, obviously. What is going on, everyone? Good morning, good afternoon, good evening. Right? No matter where you are, happy Friday, opening back up the 13th. Right here, right now. There we go. Have like the equity markets. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity markets. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity markets. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Right here, right now. I'm gonna say I got in. There we have like the equity market. Very interesting. What is going on, everyone? Good morning, good afternoon, good evening. No matter where you are, happy Friday. Opening back up the 13th. Let me just start really quick by first welcoming everyone back. Happy Friday, wherever you are right now. We're good now, right, Alberto? What's going on? Angelo? Mohammed? John? Loopy loop. All right, we're all good now. Listen. Just to check. We're all clear right now, right? Yep, there we go. Thanks, Keith. Appreciate that. Good thing I had my notifications turned on. Happy Friday. Happy Friday, everybody. Wherever you are right now, good morning, good evening. It's been a wild week. And it's time to just reassess a little bit, see what's going on over here. I'm starting. Well, I didn't mean to pull this one up. Muchin, we're going to shut down parts of the economy like we've never seen. Muchin was also on the wire saying that this is just the second inning, right? 9 innings in baseball, second inning of fiscal stimulus to come with the virus. All right. So obviously the virus has not really hit the United States yet, but we're getting close, whether we're a week or 2 or 3 away. Hopefully the situation that we're seeing in Europe is not what we see in the United States, but that's what you have to be prepared for. And that's what the probability of the likely event we're going to see is. So I think, and I believe that the majority of the reason we're seeing the equity markets limit up is that because of the Bank of China go ahead and cutting interest rates are. Now, this might have been the catalyst, or it could have been other things as well. But let's take a look at just a couple of things as far as the equity markets are concerned. I've seen this from a couple of people. What they're saying they believe that will happen that by noon Eastern time, they expect the equity markets to peak out, and then they're expecting that the equity markets to be sold going into the close, going into the weekend. It's coming from a couple of people. And one of them, here we go, Muchin. Let me pull up his name. Just in case anyone wants to follow him on Twitter. Again, I finally got some great sleep last night. I'm grateful for that. Did have a little one wake me up not feeling well this morning with a stomach ache, but I didn't get a chance to really right here. Francis Buzare. We could see a high near noon today, but only for the day as people get scared for the week. And news, this guy is fantastic when it comes to the equity markets. Been following him probably for about 4 or 5 months, and over those 4 or 5 months, I would say 90% of the time he is, he's spot on. All right, so let's get into it. Good, Abraham. Good. I don't know where you are, but the smartest thing right now is obviously, the thing about the kids is that they look or stay healthy, but they could be passing on the virus to their parents and grandparents. Yep. Euro is so out of the EU. We've had Germany saying that they're getting ready for some fiscal stimulus. We have Macron meeting with President Trump next week, and Macron is saying that he needs to get together with President Trump. Imagine now all of a sudden, they need some type of response to the virus. So that's interesting to see what happens next week. One of the things that I am happy about holding right now is this Euro position, and we'll say I was talking about building that Euro short position, that gold Euro position. And since I spoke about that, I was able to start building up the short side of the Euro. And then last night I took, which currently is actually a little bit against me, on my first entry into the gold. I'll build into that. And then I was also able, so that's good. I'm happy to be short the Euro right now. I know it's hitting into some near-term moving averages, but at the same time, you're talking about EU getting ready to spend over here. Next week is the FOMC. Let's look ahead for a moment. I will obviously preparing my top-down analysis over the weekend to give myself a little bit of a reset perspective going into next week, as well as share that with all of you. But we do have, obviously, the major event of next week is the FOMC, right? And I'm not sure. And the yields actually have gone down in Europe overnight. That's what's weighing on the Euro. The yields have gone down ever since Germany said that they were ready to do some fiscal stimulus. And that is what is help putting pressure on the Euro. What's going to happen next week when the FOMC meets? I'm not sure what the market's pricing in. If anyone knows right now what the market's pricing in, please pull it up. Let us know. Otherwise, we'll be, obviously, that's a story we will be following going into next week. But the Fed, the markets, the last I checked, was pricing in, I think, 100 basis points cut by the Fed, right? Getting us down all the way near zero. We'll see. I don't know. The surprise, again, always looking for the risk in the market. The surprise is if the Fed underdelivers. If the Fed underdelivers, and I'm not saying that I think they're going to do that. I don't think they're going to do that. But I'm watching in case they do, because if they do that, that will send the dollar soaring. The dollar index is coming into this area over here of pretty strong resistance. You could see it over here, and supply. So when I say supply, it's an area of resistance that also you could see over here, this whole big area of traders. So if you're just talking about resistance, there's really nothing above that, right? But when you have an area of supply above it, it makes it even harder to get above that area. Also, this trend line over here, I'm watching if this could come overhead and be a problem. you have this trend line resistance that the dollar index is coming to. You have this area over here. Is this where we peak out? I don't know. I'm not exiting my position. I'm holding it. But you can see that we're into this area. If you follow my mouse over here, it's the same exact in reverse area you're looking at on the DXY. If we do push through there, all right, and then we're going to come down, and then we're definitely going to visit. I'll move this over now. Maybe. And this looks like the near-term target that we spoke about yesterday. And of course, we'll just reassess the whole risk for anyone who is long dollars is next week's FOMC for sure, right? So markets off their highs a little bit over here since they're open. Obviously, everyone is going to be a little bit shaky. Is this a near-term bottom? I have no idea. That's what I want to talk about with you most today. As we go over the charts, I want to right now the Australian dollar is the strongest currency, and the Japanese yen is the weakest. You could see we didn't come down and make any lower lows over the spike. Yesterday, it sure looked like we were going to take out this low, right? That's why following momentum will get you hurt. Hold on, I want to check in with you guys in the comments. By the way, when I'm going over the charts, I can't see your guys' comments. And if someone asks a question that's there, since if you ask a question, obviously you're looking for some type of response or answer. And if I do miss it, it's not intentional. And just if it's a reasonable amount of time has passed, I haven't seen it, do go ahead and place it in. Obviously also be aware of my tempo. If I'm speaking and explaining something or giving you some type of insight or showing you something, obviously at that point, I'm not looking at the comments, right? But obviously we have many portions of our sessions where things slow down a little bit. And then at that point, I'm able to follow the comments a lot more. But I do want to check in really quick. Yeah, right now, actually, definitely, I think all of our hearts and prayers are with Lebanon and the situation going on over there with the people. And we do care, actually. Mark, what's going on? Sunset. Yep, the retracement could be happening. People could be go ahead and getting ready to position themselves according to the FOMC next week. I have no idea what's going to happen there. So back here to the Australian dollar, Japanese yen. We're looking at the strongest pair, the Australian dollar versus the Japanese yen. And that's just the reverse of yesterday. And if you go ahead and kind of remove all of this volatility, we're kind of back here towards the low of the range anyway. Now, it's nice to see the market come out of this tailspin, right? It was like an airplane just going, getting ready to crash, right? And just a little perspective, Muchin is talking about this is only the second inning. We spoke about yesterday, people have 40, 50 years at the top of this game saying that this is just getting started. We haven't seen any casualties that we know of. We've not seen one casualty that we know of, right? The Fed has got ahead and injected $500 billion, $500 billion yesterday. They're injecting, what is it, another $500 billion or another trillion today? All right. And there's been no casualties. All right. So this is, so I guess what I'm getting at here is that I personally will continue to look for risk off trades. I didn't think over here when we were a little higher was the opportunity to begin looking for risk off. And I was waiting for some type of continued retracement. That didn't happen. We sold off extremely hard. That's okay, right? What I'm doing is I'm a swing trader who's looking for clarity, sitting almost this entire week out, right? That was after being active, for the prior 2 weeks. And then really just right now, everything got really unclear and I'm sitting myself out on the sidelines. Nothing's really changed there for me in that aspect. Today, we're having a little bit of bounce. I want to see if this bounce is sold today, or whether or not the market likes to do obviously what the least amount of participants are doing, or where it could have the most hurt. So I'm open. I'm completely neutral. I don't have a bias. I don't know if I'm going to watch the price action. And that's kind of the position I'm sitting in. I'm kind of like really just watching like from this, like sitting on top of a tree with a good perspective, watching what's happening in the markets, so that when I'm like, oh, wait, now is the time to act, I'm going to have my capital ready, and I'm going to have that clear mindset where I'll be able to attack. And that's not it for me right now. Right now, I'm kind of, I'm still where I was yesterday, except yesterday was honestly a lot scarier. Today feels good, and that's the main difference. Right? And I think it was a $500 billion yesterday. I think it's $1 trillion today. The bounce will sell off, but timing is everything, right? Everyone, or I shouldn't say everyone, oil is already dipping. A lot of people are looking for that bounce to be sold off, by noon today, going into the close. It has happened for 5 or 6 weeks in a row now. Is Friday the 13th going to be also the day? I don't know. Man, could we please just take a moment here and look at the S&P? Because we always talked about when people were looking to short. Listen, you don't short this thing until it comes off until it comes off, because when it comes off hard and fast. Here it came hard and fast. Now, I didn't even think of going ahead and taking any positions in this. And the reason why, I'm going to tell you right now. Back in, where was it? Because I honestly don't know. I think, again, I honestly don't know. I think it was around this area. What was going on was this was pretty much the height of the trade war. This is when Trump walked away from the deal. He walked away from the deal because he said Xi changed the terms at the last minute. And around this area, I was taking shorts over here, and I was over positioning myself. Definitely, in the end, it didn't work out so well. And at that moment, I decided, you know what? Until there's actually a crisis, I'm going to stay away from shorting equities. Here was the crisis, and I didn't even want to get involved. I stayed where my forte was. Right, this is where I was taking the Japanese yen and Swiss franc shorts. Although I should have pushed them more, I only got like this portion, and I should have held and pushed those, and those should have made my year in 2 weeks. 3 weeks. If you all remember when I got short Australian dollar, Japanese yen, that was all the way back on the first moment of any type of risk off, right? Bad trading, not holding that all the way. Anyway, just a little review down memory lane. When this thing comes off, it comes off hard and fast. Right now, in a bear market, when this thing bounces, the bounces are violent, and that's what you don't want to get caught against. And just basically, the longer you wait until it comes really, really clear, you're just so much better off, right? So what would that mean for me right now? It would either mean coming back, the S&P coming back all the way towards 2,900, 29.2, or into this trend line over here, right? One of those things would happen for this to become attractive to look at taking this to the short side. Right now, it's not. Even though this thing could go, generally these things could fall in a recession 50%, right? So we're about halfway there already, right? 1,700 would be about 50%. But at the same time, we have to monitor the situation. Are we headed towards a recession? We're already in a recession probably, or 2 quarters of slow growth. Or are we headed towards something something worse. There's the bounce he was speaking of off of the support line over here. Let's see how that continues to play out. It is early in the session. Friday the 13th, which is why the markets are up. All right, let's take a look at some pairs. But before we get started now, what I was really trying to ingrain into my mind and into everyone else's is that this is just kind of like a pause. We don't know how long the pause is going to last for. And really just want to, although I'm still interested, I believe we're going to see, I don't know what's going to happen next week with the FOMC. I guarantee you next week's going to be another volatile week. I don't know what type of market reaction we're going to see from the FOMC. I don't know if we're going to sell this. Are we going to end up, is this going to be sold off and we're going to be down another 7% today? I don't know. Are we going to end up the day up 7%? I don't know. Let's just check in on Bitcoin. It's been a horror story. Let's start on the weekly, right? Never expected us to lose this trend line over here. Not only did we lose it, we took out the 6,000, 5,800 support level over here and crashed and burned. Look, I think it doesn't matter where we put the low. We'll call it 3,600. Depends what data feed you're looking on. I think on BitMEX, it was 3,600. Since we've spiked up now, regardless of all near-term price action over here, I said I would have to revisit my thesis if this happened. Two things. If you look at the stock to flow model, which I did yesterday, plan B, it's still within the bounds of where it could move, right? So the model has not been invalidated. Number one. Number two, regardless of whatever the Federal Reserve decides to do, and what the central banks are looking to do is obviously cut rates and add stimulus, and governments are adding stimulus. And all of those things ultimately are the best thing that could ever happen for both gold and Bitcoin. Right? So now it's a question of timing. And it's also a question of time horizon, right? I'm looking at this. Obviously, I look at this within 4-year cycles. Obviously, within those cycles, I'm looking for the bull and bear market phases, and I'm looking at this over a 10-year period. Listen, if you're asking me right now, even 10,000, 10 years from now, I think Bitcoin at 9,000 is cheap. I think Bitcoin right now at 5,700 is extraordinarily cheap. When we were in the Telegram chat yesterday, Anthony was when Bitcoin was around 3,800. I wanted to buy more then. There's no way I could have moved around money fast enough to do that. And even if I had taken initiative to try to do that at that moment, it spiked up. There's no way I would have done it. Listen, regardless of what the central banks do, Bitcoin's monetary policy is set into code. The halving is going to occur at X block. That block is, more or less 60 days away, 2 months away. Nothing's going to stop that. It's going to make it a scarce asset as much as gold, almost on par exactly with gold. And then 4 years from then, it will be way more scarce than gold. So those blocks are going to keep being produced every 10 minutes, like it or not. With the current macro situation, nothing changed yesterday with Bitcoin falling or spiking down, except it just took out a lot of leverage traders out of the game. And anyone who makes up the core holder of Bitcoin, right? The people who are actually educating everyone else, the people who are building out infrastructure. Not one single one of them was actually, they were all buying yesterday as well, changing that fiat into Bitcoin. And Bitcoin is yesterday made Bitcoin only stronger. There you go. Yeah, me too. So and the thing is even if I wanted to, I really couldn't have. Well, at least to the degree that I wanted to buy it. And that happened hard and quick. And that's when it's the most difficult, right? There's no question about it. That's when it's the most difficult, when it's falling that fast and hard. And then, it's hard to pick a spot also. Wait, it's falling hundreds of dollars a minute. Do I want to get in at 38, 32? And to be honest, for me at that point, it doesn't even matter. It's how far down, how much risk do I want to have? Do I think Bitcoin's going to $1,000? Well, even if Bitcoin goes to $1,000, I want to be a buyer, right? So it's just more of a question of it's like averaging in, right? By 4,500, by 3,500, by 2,500, and it doesn't matter how quickly it happens, because I want to own Bitcoin at those levels. All right. Oh, better yet. That's all right. At least if you're out there skating, that's a worthy excuse. But you could have had your phone on the bench when you went ahead and took a shift. So, all right, markets are kind of holding out over here. What do you guys want to do? Do you guys want to take a review of some charts right now, see where everything is? I don't think we're going to have any clarity. Or do you want to do that over the weekend? I kind of would like to blow through everything, through the whole list, and kind of get a little bit of perspective, because I haven't done it in a while, in a few days, on purpose, because right now things are not clear to me. So I'm not. Guess what? The more you sit and stare at charts, the higher probability you're going to put on a trade. So if you don't think it's the right time to trade, don't be looking at the charts. How about that? Alberto, is that true? Yep, absolutely, Abraham. We'll get right into the US dollar, Canadian dollar. Alberto, before we do, I want to check out this correlation that has been pretty strong between Bitcoin. I should pull up the Bitcoin chart, between Bitcoin and the S&P, or US equities. Now, let me look at a better, easier time frame for you. Now, what is his name? And the analyst from Fundstrat, Thomas something, has pointed out, first of all, the guy did call a year ahead of time. He called the S&P trading out to 3,400. He did it. He stuck with it even through the height of the trade war. He hit it. He was talking the fact that back then, about the correlation between the S&P and Bitcoin, and the higher the S&P went, the higher Bitcoin would be. Although to be fair, why the S&P was making new highs, Bitcoin obviously wasn't. So I don't really know about that. How tight that look over here. The S&P is rising. This is not back too far. This is only in November. The S&P is rising. Bitcoin got trashed there, right? I mean, over here you have the S&P falling, Bitcoin rising. So I'm not sold on that. But now, Alberto, over the past month, or now over the past 5 weeks, the correlation between Bitcoin and S&P has been almost 100%. You can see that it follows and tracks it almost perfectly. So right now, in this current situation, that correlation is so high. Now, correlations even in currency pairs, at some point, obviously some pairs are more tightly correlated than others, but even the most tightly correlated pairs, for example, the euro US dollar and the euro Swiss and the US dollar Swiss franc, those had a very tight adverse correlation that has not been over the past 6 months in very high at all. So these correlations, depending on the time frame you're looking at, come into play, greater and lesser. And right now, they are very tightly correlated. All right. we wanted to look at the US dollar, Canadian dollar. Let's start over there. I'm going to start on the daily time frames over here. And Martin, we'll check out the US dollar, Canadian dollar first, and then we'll get right into that. So anyway, you guys are not going to like this. You guys are not going to like this, but sorry, this is because we did it yesterday when we were sitting right here, right? We were watching this. At this point, I didn't know which way we were going to go. Were we going to lose this trend line and fall back and over here, come back down to over here, or were we going to hold this trend line, this broken trend line over here, and pop up? I waited until we popped up. Okay. And then over here became pretty clear what was going on. And I took a long over here. Right now, I said in the live stream when we were right here. Okay. And the reason I want to focus on there, I'm showing you where I messed up. This is really important. At that point in the live stream, I said, what is going to happen was the US dollar was going to take out this level here at 1.34. It was going to take out 1.35. It was going to take out 1.36, 1.37. And I said probably go to 1.39. And that's where I would look. I would want to take profit, even though who knows, it'll probably go much higher, right? And then I got into the trade when it was safe. Right over here, it wasn't really so clear. I didn't know which way it was going to go. Over here, I said, no, this is happening. I got in over here, and then really quick, within 2 days, we were all the way up to here, all the way up here, and oh wow, what a great trade! And I took profit. Probably a good idea to take profit there, coming so hard and so quick. But what happened next is where I dropped the ball. All right, what happened next is we retraced right back and down where this was resistance. This was resistance that broke and came back and tested it successfully. I took profits here. Good job. But I didn't reload here as we tested that broken resistance as support on this huge breakout and then came back up because we did take out the 35. We did take out the 36. We did take out the 37. And this is probably going to wind up taking out the 139 and more and going higher. Already did. We hit the 139. We hit all the levels I said we were going to hit. We hit them much quicker than I thought we would hit them. I didn't know if it was going to take weeks or months, but we took them all out. And it is a terrible trade, right? One of the hardest thing in trading is knowing how long to hold the trade and when to take profits. Entries are easy. Entries and exits are easy. The hardest thing in trading is managing the trade and knowing when to take profits because no one wants to give up profits. But to be successful, not to just make money, you have to be able to manage trades and push them in the right environment. This was the right environment. I dropped the ball here completely. So where are we right now is the question. Well, we came up really hard and we came up really hard, high and fast. And right now price, obviously, do you expect it's still going to keep going up? I don't. Although if the Fed disappoints next week, the yield's going to rise sharply. Dollar's going to be bid. I'm not expecting that to happen. I'm worried for that. So yeah, I mean, if that happens, of course, all bets are off. Even though I expect this to retrace and to the downside. One second, please. Sorry about that. Gold is going crazy. Yeah, let's take a look at them all. Go down right about $3 and a 0.2. All right. First, back to the US dollar, Canadian dollar. What happens here next? Listen, you're in a strong uptrend. We'll go ahead and we'll do this for the weekly Forex forecast. We need to draw in support levels. Right over here, I think is probably the closest one, right around 1.3675. Right now, you're in an uptrend, a strong uptrend for good reason. You need to be buying off of support in an uptrend. Do not look to fade this. It just doesn't make any sense, right? Instead of fading tops and buying bottoms, which at the end of the day is a losing man's game, just change your whole psychology and just become a trader who takes those easier, higher probability trades. The most money could be made on the turn of an asset, right? The most money can be made getting the trend change, but it's also the hardest to do. And you have to take a lot. You're going to have a very few winning percentage. You have to be able to take lots of losses and take them really quickly. And if you know you're not good at that, then does it really make any sense to try and do that? Wouldn't it make more sense to go ahead and just, take some more of the easier money, the high probability money? For sure it does. So right now you're waiting for pullbacks. We might have a little bit of resistance right around the 137.7 level, where actually we peaked down to. But right now, just wait. You also have the FOMC next week. It's quite possible the dollar gets sold on that. And if the dollar gets immediately sold on any type of action from the FOMC, that is going to be eventually faded, as the whole dynamics of the dollar and this dollar-based system come back into play during this type of situation. And Muchin is on the wires this morning saying there's going to be plenty of liquidity in the markets. It's not a problem. That means it's a problem. The Fed having to inject $1.5 trillion is because there's a liquidity problem. And then when you have the Treasury Secretary saying, yeah, there's no liquidity problem, there's a liquidity problem, right? So therefore, dollars. Now, what's the as far as the coronavirus was the next question we wanted to ask? Yeah, Martine, gold and the coronavirus. So gold is not so much playing off of the coronavirus as it is playing off of all of these liquidations. When the equities are getting crunched, as they got crunched, you have a lot of traders who just need to free up margin wherever possible. A lot of them have obviously had positions in precious metals. I'm not positive. Blair shared a video with me yesterday, Mike Maloney, and the video was called. It's the most recent video uploaded on Mike Maloney, Gold Money's channel. Deflationary is in the title, and I think he talks. It's a short video. I don't know if it's 12 or 15 minutes, but he goes into and this is Mike's area, obviously, Gold Money. He talks about what happened as far as traders getting liquidated, but the same thing on Bitcoin, where you need to have a bigger term perspective, especially as the central banks forget Bitcoin's halving. That alone was enough for Bitcoin, right? But now you have the central banks getting ready to unleash enormous amount of liquidity upon the markets, and guess what? Eventually, all of that printing of money leads to price inflation. So, and if we end in deflation, if we do end in a depression, gold was the only asset that held and increased its purchasing power during the depression, the 1930s depression, right? And therefore, I expect if that happens this time, it will not only be gold, it will be gold and Bitcoin. So whether we inflate or deflate, they're called a store of value for a reason, because they actually hold their purchasing power. Now, the high over here so far to date on gold was about, call it $1,700. If we see a 30% decline, as we saw during the 2008 crisis, different type of crisis, but it's the most recent crisis, and it's still similar in nature. I told some people yesterday, pull up some weekly charts, go back to October, September, November, December of 2008, and look how different currency pairs reacted during that time. People are asking, why are the Australian dollar, New Zealand dollar getting sold so hard? Go look how those pairs acted during that time. Look how the Japanese yen acted during that time. Look how the dollar acted versus the Swiss franc. Look at different pairs during that time to get an idea of what is going to happen during this time. Gold traded off 30% during that. Is that going to happen again? I don't know. It's a different type of crisis, right? But if it does, that puts gold somewhere around, I think, I'm not doing the math right now, I think it's around $1,200, right? So be prepared that it's possible gold could be trading bound towards 12, or it's possible $1,000. In that case, Jim Rogers would be a hero, but I don't think we're going down there. I don't think we're going down to 12. Mentally unprepared, right? I really wasn't prepared to see Bitcoin trade at 3,600. That wasn't in my psyche yesterday. Gold trading down that low, that would be in my. I don't think it's going to happen though. And Alberto pulled up a nice chart of a nice channel on gold, and I would say we almost hit the bottom of it. We didn't come into the bottom of it though. That would be around 1541. That looks like a good place to lean into. If you lose that level, all right, then maybe, if we saw 1450, I would not be surprised on gold. But I guess the whole point of all of this is, forget trading gold. Look to position into gold, and any dips is the opportunity to dollar cost in, right? Whether you have a level right here now at market, and then you have it down every $100 from there, right? Take a certain amount of money, divide it into 4 or 5, and then go down 1, 2, 3, 4, 5 every $100. And if it hits that level, buy it, right? And when gold hits $2,500, consider selling it then, but probably then you won't want to. We have the cross pairs to trade. Gold, Bitcoin, position into those. I don't know. The US dollar, Canadian dollar seems to be at some, it's come up really hard, really fast. And what's oil doing this morning, John? Oil is now up. No, oil is down. I saw it trading at 33 or 34 this morning. Oil's coming off its highs. S&Ps are holding it. US dollar, Canadian dollar, when things do come up so high, so fast. Right. So even though, John, on the 4 hour, you're now here making a higher high, you're pretty high and far up into it. Right. And look how far we've come up even this week. We started this week down here at 1.358, and then we came all the way up here. It's Friday. It's not a good idea at this time of the week and day to really be taking positions. You have about another hour, another 45 minutes of some good volatility. It's not the time of day, and it's about layering up probability of probability. If you're not in the habit of trading during this time of day, on this time of week, in the long run, it's gonna pay off a lot more. I don't think it's a good time to take a trade here, and I think though, John, the most important thing is you really want to the more how do I say this? This week, much less. I generally average under normal market conditions about 3 trades a week. If you're trading more than that, you're probably trading too much. But over here, I do see support down here around the nearest local support is definitely at 1.3782. You're into an area over here of resistance. Don't fade it because it's too dangerous. And at the same time, you're looking to buy. You're looking to buy in this big uptrend into any supports. The first local support is down here. As far as silver, I don't know. Normally in a bull market, in a bull precious market, silver leads. The gold to silver ratio right now is historically high, or low. I don't know what to say. It's near 100. If someone could just pull up a chart of the gold to silver ratio, watch that Mike Maloney video. Go to Mike Maloney's gold silver channel. Watch his most recently uploaded video. But as far as levels, I could give you levels on silver, but I don't know what's going on with silver. Central banks and countries are accumulating gold, right? Central banks and countries are accumulating gold. I don't think they're accumulating silver. I think that's the reason why we're seeing that distortion. And I don't think that it's going to end anytime soon. On the contrary, I think gold is the asset to own. I own a bunch of physical silver, stored somewhere far away, in a different country. But I own it and I hold it, but I believe in this current environment. I believe gold is the trade, not silver. I know that's contrary to a lot of people, but central banks and countries are accumulating gold, not silver. All right. So as far as levels, we're looking but listen, silver are down at 1550. That seems attractive to me, right? So, what happens at 14? John, I don't know if you remember, but I think you might remember. I remember during the 2008 financial crisis, we saw, this is really important, everyone. Just take a second, heads up. We saw silver was trading at $8. And the bunch of us started accumulating silver at $8. At $12, we thought we were heroes. At $12, we thought we were heroes. Got rid of it. We had no idea. Silver traded shortly thereafter at $50. Right? But here's the thing. If this crisis is just getting started here, silver could not only see 14, silver could see much lower levels. Silver, hold on one second, please. All right, sorry about that. Do have one not feeling well. So again, you want to, if you're interested in trading silver, which I'm not, I think that in this situation we're in right now, it's a question, the same thing we did on gold, right? You want a dollar cost in, go ahead and pick your levels ahead of time, right? If 1550 seems pretty attractive right at market, but right, you have down around 14, we could trade down to $12. That would be a little bit more attractive, I think, right? And if we see it, hopefully at that time we're all have the capital to go ahead and take advantage of that. That's why it makes a little sense spending some time this weekend and stop trying to be so short time frame minded, because right now we're in a situation with what's going on in the world where it's absolutely terrible. You all know that. I don't have to even for a second talk about that, but we're investors, right? And that's what we need to be looking at and preparing. And if you take a moment here and you lay out a long-term plan here, and start thinking 18 months out. How do you want to be positioned at the height of this crisis, and then how do you want to be positioned coming out of this crisis? God willing, we're able to do that, and look to average in on the way down, to be holding a nice position, because as precious metals take off, and they will take off, right? Whether silver leads or not to the upside, it's still going to make some tremendous gains during that bull market phase that is coming. $7. So, and Mark, just to touch on that, silver has always historically outperformed gold in precious metal bull markets, right? The one thing different about this coming bull market, again, and just be aware, it is countries, Russia, China, and central banks accumulating gold. It's kind of like Bitcoin versus Ethereum and altcoins. Also, like silver, altcoins in an altcoin season outperform Bitcoin. They do. Nevertheless, I don't want to hold altcoins. I want to hold Bitcoin. And the same thing, to be honest, I have my silver position in physical. I don't want to hold silver. I want to hold gold. That's my own personal deal. All right. We want to take a look at the New Zealand dollar, US dollar. Is that right? Mima, New Zealand dollar, US dollar. Let's take a look at her. So, again, so any dollar related pair, the first thing that I need to focus on is that we don't know what's going to happen next week with the FOMC. I do believe that, regardless of if they do cut rates, that could definitely put in some near term weakness on the dollar. How did this one is, I don't remember the date of the emergency cut by the FOMC last week. If this was, does anyone have the date on that? We did see dollar weakness into it, but you could see that it was sold, right? And I expect the same thing to happen. Any dollar weakness next week, and be prepared for dollar weakness next week, that could be sold, right? So here you are, if you're holding this pair, similar to the Australian dollar, Canadian dollar, US dollar, long term, these things, I believe the dollar is going to continue to outperform. However, right now we're down here towards the lows. I'm not sure where your entry is, Mima. If you're close, and right here, you need to be either protecting profits, or if you got short on that bad fill, close to getting out with pretty lucky. You could hear the hesitancy and uncertainty in my voice, and that's because that's exactly where we're at. I expect the coronavirus is going to be escalating in the United States over the next 2 and 3 weeks. You're seeing that happen now in all over Spain. It's getting out of hand. They had the Women's March in Spain recently, and all that did was increase infections. You're going to be seeing this happening now. It's questionable whether or not that happens in Latin America. We'll soon find out. But I do expect that's going to be happening. It's already spreading in the United States. They're really still not testing. People that want to get tests can't get tested. I think one of the reasons people say, well, in South Korea, things are definitely now leveling out. That's true, but South Korea is testing everyone and everyone. You could get results within hours. You have drive-through test stations so that people do not need to be infecting others while they're waiting to be tested. They go ahead, you find out the results in 2 hours. They're sending you text messages where the latest infections are, which areas to avoid. They're not doing any of that in the United States. Someone shared in the Telegram group that I forgot what it was, in Ecuador, when you go to the shopping, the supermarket, everything is wiped down with disinfectant. Everything is clean. People are taking precautions. The stuff's not happening in the United States. So I expect that not only are we going to get, Muchin was talking about, there's no problem with liquidity. This is only the second inning, though. There's going to be a lot more stimulus. They're preparing everyone. Fed $1.5 trillion. We're going to see lower lows here. It's the question of what happens next week, because I do think that the initial reaction of a Fed cut the initial spike could be a weaker dollar. But I think those are opportunities to fade, and that's what I'm waiting for, right? We got up here last time, higher lows. 1, 2, 3, 4, 5, right? Up here. Okay, that's where I want to get active if it happens again. Yeah, so I didn't know that, Sunset. I did know in California there would be no out-of-pocket insurance costs. Now all of US, that's excellent, but the problem is they can't get tested. If you go to the hospital and you're like, I think I have coronavirus, I'm showing these symptoms, they're going to be like, okay, but we only have X amount of tests, and they have to be for people who have high fever and can't breathe. Let's check her out. Got that little bit of support line over there. That price spiked through yesterday and is now resting on over here. The FOMC doesn't meet until, is it Wednesday or Thursday? I think it's Thursday. Sorry, Wednesday. There's a lot of trading ahead of us before you could, I don't know. I'm short in holding the euro US dollar. What are you looking at, Thomas, as we come into the support over here? What's your opinion? So Jesse, I don't know if it's the case or not. I'm under the impression that because it was a bad week for swing trading, which it is, that you were on the sidelines. And if that's the case and you stayed like that all week, then that was phenomenal trading on your end, Jesse. To recognize the market conditions and to act in the best possible way is phenomenal. So I just want to affirm that behavior. There's not behavior that you see a lot. So if that's what you were doing, Jesse, then you're doing the right thing. And I know that that's hard when you see there's always a lot of opportunity in the markets, right? And there was, there was a good trading environment, a great trading environment. But if you stood aside because it was not the right time for you to be there, that's awesome. The equity markets still maintaining their highs. I think that's also helping the dollar bid. The dollar disconnected from its tight correlation with equity markets over the last couple of days. As you saw, when the equity markets were down, dollar became bid yesterday. However, you're seeing today with the equity markets up, the dollar is still bid. So that further ends that correlation we were seeing between the dollar and the euro, which started right over here and then peaked out right about here. Oh my goodness. Litecoin is up 27%. I was not interested in it. There's no way I was looking at it, but I remember not when it was down. I was looking for Bitcoin when it was trading down, but I remember seeing Litecoin up, I think 11% while everything was just turning green, leading the way, and now it continues to lead the charge. Now, granted, these are just retracements. These are still getting smoked on the week, right? These are just retracements. Gold, Thomas Euro now coming in and testing that level hard right here, the level, the whole number. We have a lot of people in here for a Friday session. We do have a lot of people in here for a Friday session. Awesome. Really awesome. I do appreciate that. First of all, it just, it affirms to me that you all enjoy spending time in here learning and growing together. And then also that obviously it also does help this channel get seen by other people. Google shows it very little love. I don't think that's a reflection of the content and the information that we is provided in here. But it does help others know that you like what's going on and help others see what's going on. So that's cool, because the thing is over the weeks, over the months, over and over again, we wind up getting just the right people. It's like this puzzle being put together, and just the right people start hanging out in here, spending more time. They really fit in well, and it's like the more the merrier. But it's like the people that belong here wind up sticking around, and it's awesome. I enjoy it. Appreciate that, Truth, and we're all about the truth in here. But I do think that's it for today. This is a good time to wrap up this session. Now, just be aware it's going to be a volatile session. Look for what happens, in the starting at noon through the rest of the session here in New York, and especially for the equity markets. Watch what happens the last half hour trading. The last half hour trading is when institutions are trading. Watch today whether they're buying or selling. It's also when the plunge protection team gets to work. Algos are super active, right? Let's see if they sell or bid up the market today going into the weekend. And there's not much else to add right now. I'm going to, if anyone has any currency pairs they're interested in getting a really good look at going into next week, just in the chat right now, just type in what exactly pair that you're looking for to be included in this week's weekly Forex forecast and analysis, and I will include it. Otherwise, I'm going to go with obviously what's interesting to me and what's on my mind. So I'm just going to hang out another minute or two, just in case anyone has anything they want to look at. We'll include it. Otherwise, we will be doing the norm. Let's look at it right now too, because we didn't check out the. Wow, got a nice bounce here on the dollar versus the yen. So I need to pull up a weekly chart or a 3-day chart here. 30-day chart looks pretty good for me here. Man, I wish I was a hero, and I wish I wish I were picking a bottom down here. But anyway, here we are today, right? We're back up at 107. I'm a fan of the dollar. So you're seeing a little bit of weakness, I believe, because the Bank of Japan is actually, I believe, expected to cut next week. All right. Bank of Japan is expected to cut and to act next week. All right. Now, any type of retracement here on the yen pairs, I firmly believe is just going to be a gift. All right. And this is why it's important of having this longer term focus. If you're pulling up charts and you're reacting to the chart, it's not so good. If you're actually planning out with a higher time frame what is going to happen, things get a little more interesting, right? I'm expecting to see, and I'm still watching for China, right? So far, no sign of further infections in China. Let's keep an eye on that. But the US, we're expecting things to get bad in the next 2 to 3 weeks. Seen a lot of headlines, a lot of normal, quote unquote, normal people starting to really understand the situation. And I think we're going to see risk off again, Japanese yen coming into next week as they look to cut. Maybe we could see a little bit of a retrace. That's something to fade. So here on the US dollar, Japanese yen, there are two levels that I'm watching. It's this trend line over here, right? And it's also this resistance. If we do get above here, if price gets above 109.71 and starts trading back above, well then I'm gonna be very weak-minded towards the Japanese yen, 100%. And we've had two fake outs, a fake out to the upside and a fake out to the downside. Heath actually drawn in this. There's a trend line over here somewhere. I'm not sure where it is. I would like Heath, if you have that chart, hold on. I think it's kind of relevant. I don't see it, so I can't draw it in. Nevertheless, this is the line I'm focused in on to the upside over here, this trend line and 109.71. If we trade above it, all of a sudden, I am favoring the dollar over the yen 100%. But right now, as we come back into this area, and this is the magic area, if we are coming into here next week and are rejected, all right, that is a good place to take a short on the yen versus the dollar. Over here right now, I'm not, I'm a little picky. Canadian dollar, Japanese yen also. We saw that retracing yesterday. It's following up today. Maybe extend this trend line over here. Oh, sorry. This is something as we come in and test this trend line over here. Let's go ahead and make that a little darker. That looks like an area of interest for me to go ahead and look, see how price reacts. If we take out that trend line over here, then we have, I didn't even change this over. What I'm getting at is over here, Australian dollar, Canadian dollar, New Zealand dollar, Japanese yen. Those continue to be the pairs that I'm looking, not the US dollar, to take advantage of on these, on any type of retracements versus the yen. So, and I feel like, and I'm going to look at the Swiss franc pairs as well. That's where I want to be focusing my attention on. Those are still remain pairs. Like I said before, pull up a weekly chart, go back to 2008. Look what happened with the New Zealand dollar, Japanese yen. Look what happened with the Australian dollar, Japanese yen. It's not going to be different this time. Those are the pairs that I want to focus in on. And I'm just going to wait it out and try to get into some good positions. And why I do still think that we haven't seen any casualties yet. Is it possible that yesterday was the capitulation day? Maybe on Bitcoin. I don't see it for the markets. It's entirely possible. We always have to be aware of everything and all the possibilities around us. But as it stands right now, I'm waiting for these risk-off trades reset and to position it back into them. Beautiful. Love to see that. Mima, that's terrible. Try Mima, if you're still here, take a moment to, first of all, clear your cache, and also obviously restart your machine, and then that should help. Gabe, have a good weekend. All right. I hope it does break down with you, Thomas. Yeah, man. We'll end it on that. Everyone, as Blair's saying, have a stellar weekend. Stay safe and healthy. This is where Jesse already has in the emoji of peace and stay safe. All right, everyone. I'll talk to you later.